Last year, you paid taxes on every single paycheck, money taken out before you ever saw it. Now look up. The people at the very top play a completely different game. Some of the richest humans alive pay a tax rate near zero. Not hiding it, not cheating, every bit of it, completely legal. A $200 billion fortune, taxed like it was almost nothing. You, on your salary, 22%, 30, sometimes 37. The yacht, the private jet, the mansion that could swallow your whole street. Often bought with money that was never taxed at all. So how is that even possible? It is not one trick. It is a playbook, and I am about to walk you through every single play. Stay with me. The rich legally avoid taxes. And before you call this a conspiracy theory, we have the receipts. In 2021, a leak of real IRS records revealed what the richest Americans actually paid. Jeff Bezos, in 2007, and again in 2011, his federal income tax was zero. Elon Musk, in 2018, also zero. Michael Bloomberg, Carl Icahn, George Soros, all hit years paying nothing. And across the 25 richest, their true tax rate was about 3%. 3% on hundreds of billions in gains. Here is exactly how. Chapter 1, and the first secret is the biggest one. The rich do not get rich from a salary. For years, Elon Musk took a salary of exactly zero. Their wealth lives in the stock they own. And here is the rule that changes everything. Stock is not taxed when it goes up. It is only taxed the moment you sell. So the rich found the simplest answer of all. They never sell. Their fortune grows for decades, completely untouched by the tax man. No sale, no income, no tax. That is play number 1. Chapter 2. But if they never sell, how do they buy anything? This is the strategy with a name. Buy, borrow, die. First, they buy assets that grow. Stock, real estate, whole companies. Then, instead of selling, they borrow against them. A bank will gladly lend a billionaire cash, using their stock as collateral. And here is the magic. A loan is not income. So a loan is never taxed. They live, lavishly, on borrowed money, at rates you will never be offered. Spend millions, pay almost nothing. That is buy and borrow. Chapter 3. So what happens when they actually do sell? Even then, the system quietly tilts in their favor. Your paycheck is taxed as ordinary income, climbing to 37%. But money made from investments is taxed as capital gains. And the long-term capital gains rate tops out at just 20%. Warren Buffett famously admitted he pays a lower rate than his own secretary. And founders get an even sweeter deal, called QSBS. Sell your startup and exclude up to $10 million in gains, tax-free. Same dollar, different label, a fraction of the tax. Chapter 4. The loophole Wall Street will fight to the death to keep. Hedge fund and private equity managers earn billions managing other people's money. That is pay for a job. It should be ordinary income. But they call it carried interest and tax it as capital gains instead. On billions of dollars, the gap is staggering. It is the most defended loophole in America, and it is still here. Chapter 5. How a retirement account became a $5 billion shelter. A Roth retirement account lets your investments grow, completely tax-free. Peter Thiel put cheap founder shares of a tiny startup into his Roth. That startup was PayPal. The shares exploded. A $2,000 account grew to $5 billion, tax-free. A retirement account with $5 billion that the IRS cannot touch. Chapter 6. And this next play is the most powerful of all. Remember, they spent a lifetime avoiding a sale, so they are sitting on enormous, untaxed gains. So what happens to that giant tax bill when they die? It simply vanishes. It is called the step-up in basis. When heirs inherit, the gains were set to zero. Decades of growth. The tax bill. Gone. Buy, borrow, die. The loop closes, and the tax is gone. Chapter 7. Now watch how giving money away makes them richer. A billionaire donates stock to a foundation with their own name on it. They get a massive tax deduction today, but they still control every dollar of it. Give it away on paper. Keep the keys in your hand. Chapter 8. Real estate plays by its own private rulebook. You buy a building. It pays you every month in rent. But on paper, the government lets you pretend it is losing value. That is depreciation. Some major developers have reported tax bills of just a few $100s. And when they sell for profit, a 1031 exchange rolls it forward. Tax-free. Cash flowing in. Taxes wiped out. On paper, a loss. Chapter 9. The last fortress. The trust. The ultra-rich move their assets into trusts, out of reach of the estate tax. Casino mogul Sheldon Adelson used a tool called a GRAT. He passed nearly $8 billion to his heirs and sidestepped an estimated $2.8 billion in taxes. A dynasty trust can guard that wealth for 100 years or more. The family keeps the wealth. The tax man never gets his turn. Chapter 10. And unbelievably, the playbook still keeps going. Opportunity zones. Reinvest a capital gain into a designated area. Hold it for 10 years and pay zero tax on all the new growth. Or just move. Puerto Rico offers a 0% rate on capital gains. It is why crypto and finance fortunes keep relocating to the island. Municipal bonds. Lend money to a city, and the interest it pays you comes back completely tax-free. Life insurance. Quietly used as an investment wrapper. The money grows tax-free and passes to heirs tax-free. Donor-advised funds. Donate. Take the deduction instantly, then hand the money out slowly, while it grows tax-free for years. And the one play you can start today. Tax loss harvesting. Sell your losing investments to erase the tax on your winners. Stack a few of these together, and an entire fortune grows barely taxed. But here is the part they never advertise. Every dollar legally avoided at the top, someone else has to cover. And usually, that someone is you. So here is the truth you were never taught. None of this is evasion. None of it is illegal. It is the tax code, working exactly as it was written. Written, in large part, by the very people it rewards. You cannot buy, borrow, and die on a paycheck. But you can borrow pieces of the playbook. They are open to you too. The rules are public. Almost nobody ever reads them. Now you have. Oh, the next time someone says the rich do not pay taxes, you will know the real answer. They do not have to. And it was legal the entire time.